So now we are going to discuss question number 68. So budgeted and sales, actual sales for the month of April 2025 of two products, Joy and Toy of Chandan Limited, were as follows. So they have given two products, Joy and Toy. So for that, we have budgeted units and selling price, and also we have actual selling price and sales units. So budgeted cost for products Joy and Toy were 4 rupees and 1 rupee 50 paise per unit respectively. Work off from the above data the following variants of the individual products as well as for the company as a whole. So now we are going to calculate sales value variance, sales value price variance, volume variance, mix variance, and sub volume variance. So this problem is relating to your standard costing. So now we need to calculate all the variances for individual products and as well as company as a whole. So both we need to calculate. So now what are all the details I required now? First, I need actual sales quantity, actual selling price, that and all is easily available here. So budgeted selling price and budgeted units that also available. Only thing I need to calculate is for mixed variance and sub volume variance, I need to calculate. That is the revised standard quantity I need to calculate. Now, here, what happens? Here, the trick is. So, usually we will be having one actual sales price, right? But in this problem, we have two selling price. So, actual sales is for Joy. It is for 5 rupees. We have sold 5,000 units, and for 4.75, we sold 1,500 units. So now I need to calculate by combining both this. So now budgeted units, which is easily available in the question. So for Joy, it is 6,000. So budgeted selling price. Budgeted selling price is 5 rupees. And for Toy, it is 10,000 and 2 rupees per unit. Now let's come to actual. So my actual is, so actual units, that is, here I have 5,000 units for 5 rupees, right? So I have 5,000 into 5, so 25,000, and another unit is for 1,500 into 4.75. So 1,500 into 4.75. So 7,125. So total sales, total actual sales will be 32,125. This is actual selling price. So my budget of sales will be 6,000 into 5 only. So 30,000. Here it is 20,000. So same way I want to calculate for toys, 7,500 into 2 and 1,750 into 1.9. So my total actual sales is 18,325. Fine. Now I need to calculate first sales value variance. So remember sales value variance. So this is overall variance for sales. So the formula will be the difference between total actual sales minus budgeted sales. So here I want to calculate actual sales first because if I am projecting sales as 100 rupees, say for example, my budget is 100 rupees. If I am selling it for 110, then I am gaining 10 rupees additional. So here my formula should be actual sales minus budgeted sales. In case of cost variances, you have to put budget first. So here, but in sales variance, you want to calculate actual sales first. So for Joy, my actual sales is 32,125 and my budgeted sales is 30,000. So 2,125 is favor. Then comes, let's calculate for toy. So my actual sales is 18,325 and budgeted sales is 20,000. So here it results in negative, right? So that means adverse. 1675 is adverse. So as a whole, total for your company as a whole is 450 and this results in positive. So this is in favor. Okay, now let's calculate price variance. So price variance is nothing but the difference in what is my budgeted selling price and what is my actual selling price. So for that we need to calculate. So sales price variance. So sales price variance is equal to this should be multiplied with actual sales quantity. So actual sales quantity into my actual selling price. So you can easily remember the formula. If it is a sales price variance, the difference should be actual selling price per unit minus my budgeted selling price per unit. So multiply by your actual sales quantity. So now I have two bifurcations, right? So I have to calculate for two line items. So if I'm calculating for Joy, I will be calculating twice. That is for 5,000 units into. So here I'm splitting it to two because my selling price for two units is different, right? So I want to calculate it as two slabs. So 5,000 into here actual selling price is 5 and my budgeted selling price is also 5. So there is no variance at all. So here my variance is 0. That is nil. But for another units, 1,500, that for that slab, my actual selling price is 4.75, but my budgeted is 5. So here I have a variance of 0.25. So I will be getting in adverse. So I'm getting answer in minus. So it is adverse variance. So total for Joy is 375. Adverse. Then let's calculate for toy. Now for toy also I have to calculate in two different slabs, that is for 7,500 into actual selling price is 2 rupees minus my budget is 2 rupees. So here the variance will be nil. Then for another slab 1,750 into actual selling price is 1.9 minus 2. So zero point 0.1 is my variance here. So 175 is adverse. So here my total will be 175 adverse. So as a company as a whole, total variance will be 550 adverse. Now let's calculate sales volume variance. So now we are going to calculate for variance for volume. So the formula should be the difference between my actual quantity, that is actual sales quantity, minus budgeted sales quantity. Into here, I need to consider budgeted selling price. Remember, here I need to consider budgeted selling price per unit. So for Joy, what is the actual sales quantity? That is 6,500 units, right? And here it is 9,250 units. So for Joy, the budgeted sales quantity, sorry, actual sales quantity is 6,500 minus budgeted is 6,000. So we will get a favor variance into my budgeted selling price is 5 rupees. So I will be getting 2,500 favor. Then let's calculate for toy. So toy, the actual quantity is 9,250, but budget is 10,000. So my actual is less, so it will end up an adverse. So adverse variance of 1,500. So let's calculate total. So total is 1,000 rupees. So this is coming in positive. So total variance is in favor. So hope till now it is very clear for you. So now let's move on to mixed variance. Whenever we are having two products, if it is in case of material, we need two kind of materials, raw materials, right? If it is in case of labor, we need two kind of laborers, that is skilled, unskilled, or women, male, like that. So it should contain some combination. So then only this mixed variance and sub volume variance will be covered. So here in this problem, we have two products, so we can calculate mixed variance and sub-volume variance. So for that, we need revised standard quantity, that is RSQ. So we need to calculate RSQ first. So RSQ, how we will be calculating? So that is total actual quantity divided by total budgeted quantity. So here my total actual quantity, that is 6,500 plus 9,250. This is my total for Joy and Toy together. That is 15,750. So here, if it is 16,000, so I am converting into for 15,750, what will be my sales mix? So here my formula is 15,750. That is total actual quantity into, so total budgeted quantity. Total budgeted quantity is 16,000. So here my total budgeted quantity. So my formula is total actual quantity into my individual budgeted quantity divided by total budgeted quantity. So my total here is 15,750 into individual is 6,000 divided by 16,000. So 5906.25 units. Here for 10,000, here total actual quantity is 15,750, but individual standard is 10,000, right? Divided by 16,000. So here it should be 9843.75. So this is my RSQ. So now I want to calculate revised. So sales mix variance. So here the formula is actual sales quantity minus revised standard quantity into my budgeted selling price. So for Joy, my actual sales quantity is 6,500. My RSQ is 5906.25 into my budgeted price is 5. So I will be getting 2968.75 favorable. And for Toy, my actual is 9250. My revised is 9843.75 into budgeted selling price, that is 2 rupees. So I will be getting negative variance of 1187, that is an adverse. So my total variance is 1781.25, which is in favor. Now let's calculate sales sub volume variance. So above we calculated the difference between actual selling quantity minus your reverse RSQ, right? So here we need to calculate the difference between RSQ and budgeted quantity. So RSQ minus budgeted sales quantity into my budgeted selling price. So for Joy, my RSQ is 5906.25 minus budget is 6,000 into my budgeted selling price 5 rupees. So here it is an adverse variance of 468. Then let's move on to Toy. So RSQ 9843.75 minus my budget 10,000 into budgeted selling price 2. So here also I will be getting an adverse variance. So 312.5 adverse. So total is 781.25 adverse. So now here you can cross check whether your calculated variance or coming right or not. So if you're adding mixed variance and sub volume variance, that is 1781. Here it is adverse 781. So we will be getting a total of 1,000 rupees. So it should result in volume variance. And if, say for example, price variance and this volume variance together, it is 450. So it will result in sales value variance. So if these numbers are not matching, so we will be having some clerical errors, so we can cross check that. Let's move on to question number 6B. The following details applied to an annual budget for Raj and Sons, a manufacturing company. Working days, we have 65, 60, 55, and 60. Production, raw material purchase, budgeted purchase we have So quantity of raw material per unit of production, 2 kg. So for 1 unit, we require 2 kgs of raw material. So budgeted opening stock of raw material, 4,000 kgs, cost 4,000. Budgeted closing stock of raw material, 2,000 kgs. Issued or priced on FIFO basis. So now, actually, the same similar kind of problems you will be studying in your cost accounting as well. So this is an easy problem. First, we need to calculate the following budgeted figures: quarterly and annual purchase of raw material by weight and value. We need to calculate what is the quarterly purchase and what will be the annual purchase. We need to calculate quantity as well as value. Closing quarterly stocks by weight and value. So this is an material budget related problem, right? Purchase budget, everything you have. So first I need to calculate what is my consumption. Then only I can able to calculate how much I need to purchase. So now my consumption is, so first I'm going to calculate annual consumption. So what is my annual consumption for first quarter? So this is quarter 1, 2, 3, and 4. So working days into production unit per working day. That is how many units I'm going to produce. So first I want to calculate number of units produced. Okay, so this is based on how we will be calculating working days into production per day. So here it is 65 into 100. That means 6,500 units I'm going to produce. So what is the raw material requirement here? For producing 1 unit, I require 2 kgs of raw material, right? So I need 6,500 into 2. So 13,000 kgs of raw material. So consumption is 13,000. For second quarter, so second quarter it is 110 into 60, and for third quarter 120 into 55, fourth quarter 105 into 60. So everything I'm multiplying by 2. So I will be getting my consumption here. So I received all the 4 quarters consumption. In total, that is my annual consumption will be 52,000 units. Okay, so now I calculated what is my annual consumption. So here what they told, quantity of budgeted opening stock, already I'm having 4,000 kgs and closing stock is 2,000 kgs. So now my purchase, so annual purchase, so annual purchase will be my consumption, that is 52,000 kgs. Here I want to add my closing stock, budgeted closing stock, because I need to produce that units also, right? So 2,000 kgs I required at the end, less budgeted opening stock. That is opening stock I am having is 4,000 units. So my annual purchase will be 50,000 units. So this is my annual purchase. So now what they told in the question. So I just want to calculate what will be my quarterly and annual purchase of raw materials. So here, do we have any information regarding purchase? Let's analyze. So raw material purchase, that is percentage by weight of annual cost. So we are going to purchase 30 percentage in first quarter, and then second quarter 50 percentage, and in third quarter we need to purchase 20 percentage. So my annual purchase will be, so my weight of 15,000, right, will be segregated as 30 percentage, 50 percentage, and 20 percentage. The total should comes to 100. So in fourth quarter, I'm not purchasing anything. So this is my weight. So that means this 50,000 will be, here I calculated no annual purchase of 50,000. This 50,000 will be segregated as 30% in first quarter and 25 50 percentage, that is 50,000 into 50 percentage in second quarter, and in third quarter it is 10,000. So this is my annual purchase by weight. So what will be my purchase value then? So here in the question they have given purchase value as 1.05, 1.125, 1 1.05 and 1.125. So purchase value will be 15,000 into 1, and 25,000 into 1.05, 10,000 into 1.125. So my purchase value will be 52,500. So this is the first part. Now what I need to calculate, quarterly stock, right? What is my quarterly closing stock? I need to calculate this thing. So this is based on FIFO. So now in first quarter, so here I'm having receipts, that is quantity, rate, and value. And then we have issues, and then balance. So again, quantity, rate, value. So for first quarter, so how much is the receipt? I'm purchasing 15,000 units. I want to purchase at the rate of 1 rupees. So I will be having 15,000 as value. Here, opening stock. I forgot to include my opening stock. Opening stock is 4,000 and the value is also 4,000, right? That means 1 rupee. 4,000 divided by 4,000, 1 rupee. So my issues. So how much I am issuing during first quarter? So first quarter consumption, how much it will be? So my purchase is 15,000, fine. But how much I am going to issue during first quarter? It is consumption is 13,000 units. So I am issuing based on FIFO basis. So here This 13,000 I'm going to issue based on first in first out method. So for first 4,000 units, I'm going to issue based on my opening value. So 4,000 into 1, 4,000 rupees. So in 13,000, already this 4,000 is gone. So 9,000 will be issued in this receipt, right? So 9,000 will be gone. Now my closing stock will be, out of this 15,000, this 9,000 is already issued. So this is based on 1 rupee each. So here I'm having 6,000 as my value. So during second quarter, what is my purchase? So my purchase is 25,000 units at 1.05, that is 26,250. Now my value is here. I'm just entering my closing stock value. So 6,000 I am having one lot and 25,000 I am having another lot, right? So 26,250. So now how much I am going to issue here? That is consumption 13,200. So out of this 6,000 I will be issuing this. So remaining 13,200 minus 6,000. So will be gone from my purchase, that is 1.05. So my balance will be, in 25,000, I already reduced the 7,200. So my balance units will be 17,800 at the rate of 1.05. So my closing value will be 18,690. Then let's move on to third quarter. So third quarter purchases 10,000 units. Rate is 1.125. Value is 11,250. So now my issue is 13,200, right? So in this 13,200, I already have in my opening balance itself. So this entirely will gone by 1.05. So 13,200 into 1.05. So 13,860. So now my let's come to closing stock. In this 17,800, my 13,200 will be gone. So I will be having 1.05, that is 4,830. Then this 10,000 lot will be there. So in total, I have 10,000 plus 4,600. My value will be 16,080. So fourth quarter, I'm not purchasing anything. Here I am having issues alone. My issues is 12,600. So this 12,600 will be issued based in first 4,600 first one. That is 1.05. 12,600, I already issued 4,600. So the balance will be issued in 1.125 lot. So 9,000 will be gone. Now my closing stock will be, this 4,600 is fully gone. Out of this 10,000, only 8,000 is gone. So this is based on 1.125. So value will be 2,250. So this is my closing value. Hope this is clear.